biggest takeaway you got in this meeting so far?
Getting some knowledge about how, really, I think some time blocking and getting some accountability. Some people I need we need to keep each other in check in on each other, and make sure we're staying on our targets instead of trying to do it all alone. You know.
Awesome. If someone was thinking of coming to one of these events, what would you tell them?
If you're serious about it and you're really wanting to get into real estate at a level worth doing, by all means, the knowledge is power. And this is such a group of people that there's so much knowledge, and not just the knowledge, but genuine people who want to see you do well. Yeah, that's priceless. You can't put a price on that.
All right, that's awesome. Thanks, Jeff.
You've seen what other people have had to say. Now it's time for you to put this stuff in action for you and for your family. We'll see you at the next event. Ladies and gentlemen, welcome back to the Opportunity Zone. It is that time on Tuesday where we get to dive into the news, the topics that are affecting real estate investors. And everybody here, you guys know, with everything happening in this current presidential administration, there is not a dull moment ever. Literally, we have to digest this stuff, we have to process it, and we have to implement what's going to work for us as investors each week. So with no further ado, I'm going to get into it. Okay, a couple topics we're going to hit today, and then I'm going to introduce my co-host, okay? Wall Street is wobbling a little bit. Anybody see the stock market last night? If you're following us on social media right now, just type the word stock in the comments, stock. If you got to watch a little bit of the wobbles, there are some people that are getting a little nervous. Why? We had a huge run up last week, setting a new all-time high. And this week, we've got a lot of floundering. People are nervous about some of the stuff going on. So we're going to talk about that and how it pertains to commercial real estate investing. We're also going to talk about the Jamie Dimon mic drop that maybe you don't want to hear. He said something kind of controversial last week, and it's got a lot of head shaking right now, and it's something that's important for us to know. We're also going to talk about what we forecast for rents in multifamily. There are some changes happening right now, a huge dynamic, huge shift in inventory coming, and we want to talk through today what's going to happen with rents specifically. We'll also talk about investing in holy cities. For the first time ever, there is an opening where people like us can actually invest through a specific vehicle into the holy cities. A couple of specific ones we'll talk about today. All of that and more. Let me introduce my co-host, Mr. Chris Slavin. Chris, are you here live, ready for action?
I'm ready, man. I am here. How's everybody doing?
Good, good. Hey, CJ, if you could put a spotlight on Chris as well. He's going to help me dissect all the news, all the headlines, plus the man. I know a lot of people are waiting for this, but Chris, you were recently approved with a very prominent lender, one of the biggest in the multifamily space. They sought you out. They came to your office. They sat down with you. What did they just greenlight you for acquisition wise?
They want me to start doing deals above the $30 million mark. They want to see me start pulling in $25 million plus loans. And they came to me with this as a result of our track record, our ability to operate properties, to our ability to turn around properties, and our integrity. At the end of the day, one of the things that their officer said while he was sitting in my office was, it was a breath of fresh air to know that what he was told was true, and that he can have open and honest and frank conversation and work as a partner with us. So we need to get on board and start applying for larger loans, because he knows, based on his experience, it's easier to get us approved for larger loans than it is for the smaller ones. And he's backing us 100% to do that. So if you've got a deal that's up there, $30-40 million, and you want to make something happen, we're ready for you.
So you heard it from Chris's lips. If you got a multifamily deal that you're looking for someone to fund, a partner to step in and be the bank, essentially, Chris has a green light for us. And we're going to start spotlighting those deals on this show. We'll do a live deal critique, and we'll tell you if it's one that Chris would say, yeah, we can fund that one, or not. So if that's of interest to you, stay tuned to this episode. We'll give you all the details on it. And if you have to bounce early, you can send your deals to deals@homeinvest.com. We'll get you over our buy box for that. Cool. All right, Chris, I'm going to just cover a quick Bible verse of the week, and I'd love if you could just give us a quick blessing, and then we'll jump into it. So the Bible verse this week is Philippians 2, verse 3. Do nothing out of self-ambition or vain conceit. Rather, in humility, value others above yourself, not looking to your own interest, but each to other people's interests first. Chris, what is this message really trying to teach us?
What this message is really trying to teach us is to be a good servant, put others first, love each other, brotherly love. All the biblical teachings are coming to point here. And that basically at the end of the day, we'll be rewarded in ways that we don't understand today. So serve each other, put each other first, and shed the love and the message of God on this earth.
I love that. And Chris, I'm just going to tie it back to our company mission statement, the reason why we do what we do. We are a faith forward company. If you guys haven't met us, this is the first time you're seeing us on social media, then just know we're faith forward. All that means is that our mission is not just about financial success, although it's a prerequisite, it's a requirement for us. Our bigger mission, though, is to help build generational wealth and to take care of people through Christian values. So by sharing in investment opportunities with us, by educating others and opening the doors for other people to succeed, we show this principle in action. And then we're able to really live out our mission statement as a company. So we're all about making a ripple and helping other people in the world. So with that said, Chris, could you give us a blessing and we'll jump in?
Absolutely, be honored to. Heavenly Father, first and foremost, I'd like to acknowledge who you are in my life, and I want to thank you for the blessings that you bestow upon us. As we walk this journey called life, please allow us to share our blessings, our knowledge, and our talents with the people that are listening so that we can positively affect their lives, so that they can affect other people's lives, and to truly spread a message of love, concern, and caring across this world. I pray this in your name. Amen.
Amen. All right, this is the opportunity zone. So I'm going to take a couple of minutes here and show you our current opportunity. I know that we continue to get requests for multifamily, and trust me, guys, we're fighting for you. We are. Our team screens literally hundreds of deals, and we bat down the majority of them, and we only take forward the stuff that is really, really good. So that's why our wait list is so long already for our next multifamily property. So if you're still waiting for a really killer multifamily property, then join our wait list. Literally, Sue, if you wouldn't mind dropping a link in the chat for how people can book a call with us, join our wait list, get to know us. And then when we have the opportunity for the next multifamily, you can be the first to know about it. And because they always subscribe really fast, they oversubscribe typically in the first few weeks. The opportunity.
Can I interject something there? We teased about a deal, I believe it was last week or the week before, about a great cash flowing deal that we had under contract and that we're in the due diligence period for. The deal was phenomenal on paper. Everything looked great. But as we started doing some investigating, there were some things that were not initially apparent. The neighborhood, the property, the management of that property, that we didn't feel it was worth taking any kind of risk with our investors' money. So we went under contract, but during that due diligence period, we saw that it was not something that we could be proud of, or something that we felt we could honestly put our money behind, and there's no way that we're going to risk our investors' money. So that's another reason that that we're different than other syndicators. We make sure that the deal is safe, and we went through 100 deals to find this one. And then even as we investigated further, we didn't put greed first. We put our values first and our sense of security for our investors. So we had to walk away from that deal. So some of you may have heard about that deal. We talked about it briefly, but I'm here to tell you that it didn't fit the criteria, and we didn't think it was right for us to move forward with that deal.
I'm glad you covered that, Chris, because we have had questions come into the office. When is that one ready? When can we send money? And so we turned that one down. So don't send any money for that one. We're not going to publish that one. We will come to you guys when we've got the next one. Chris, another question we got is why are you dressed like Bono?
Oh, cuz it's a fashion statement. No, me and fashion statements don't coexist. I actually had surgery on my eyes. I had my lenses replaced in my eyes for some other health related reasons. But I got bionic lenses installed. So what that means is that they can change the prescription of my lenses and up until a certain point. And they do that using ultraviolet light. So I have to protect my eyes from ultraviolet light or literally protect or change the prescription in my eyes. Once the doctors get it right where they want in about 3 weeks, they'll lock it in and I won't have to look like Bono anymore. Although some people say it's a catchy look for me and it covers up a good part of my face. So maybe so.
All right, we'll let you be Bono as long as
All
you
right.
keep sporting them, man. Okay, so here's the option we have right now. If you're looking for an opportunity, if you want to park some capital, then this is a deal that I'm personally invested into. Every time that we hear this administration say the word tariff, the big T word, I get a little bit more excited because this particular investment does better. What is it? It's investing into manufacturing. It's the industrial asset class. Literally, we've got 6 of these. You'd call them a manufacturing facility or a machine shop, where they make everyday parts. Think about if you've ever reclined on an airplane seat or even your vehicle seat, there's a metal part in there that someone had to make. If you've ever pressed the brakes on your car and you've ever seen the springs that are inside of them, there's springs that have to be made. We make those components at these manufacturing facilities. And every time that this administration says the word tariff, what happens is companies here domestically, including Apple, they just announced they're going to put $500 billion back in the United States manufacturing. Whenever companies hear that word tariff, they start reinvesting in American manufacturing because they don't want to have to pay that massive tariff to import from China, to import from India, et cetera. So this particular investment is doing really well, and it is just really a God timing thing, the way that it's worked out. We've invested in this class for a couple of years now, and since this administration stepped into the White House, it is dominating. If you're looking to get a solid return on an investment class that it's not as competitive, then this is probably one you should take a peek at. There's returns that are paying out literally between 8 and 12%. Part of it depends on if you want to be a short-term investor on the project or if you want to be a longer-term investor on the project. We have options that range from 18 months all the way up to 5 years. So it depends on what fits your appetite. If you'd like to explore this, and I should say one more thing, the 8% to 12%, that's either dividends or monthly payments. There's also backside profit available, which could take you to the 20% range. If you'd like to explore this particular asset class, then book a call with our team. There's a link in the chat for you. If you don't see the link because it's on social media somewhere without the link, just put the word call in the comments, CALL. And our team will reach out to you. We'll get you the link, and then we'll tell you all about this and get you the perspective. Chris, you ready for the news, man?
Oh yeah.
So we got a chance. Chris and I got a chance to just preview some of the news today before we took it to you guys. And there's some controversial stuff happening right now. Some comments being made by prominent CEOs that maybe shouldn't be made. We've got some market movers happening. So let's first start with the market itself. Last week, we set a stock market high. This week, it's been turbulent. Chris, what is going on and why does this matter to us as investors?
Oh man. Okay. So what is going on? In my humble opinion, NVIDIA is driving a lot of the S&P market, along with Microsoft and Apple. But NVIDIA is always volatile. But right now, with this whole convergence and divergence of AI with Chinese, DeepSeek is creating a problem, right? It's creating a problem for Chat GPT. And the thought is that NVIDIA's stock is being driven down as a result of this divergence in the AI technology. So that's the scare right now, right? So American investors, Chinese technology coming in, and what is the government going to do about it? Is this going to get blocked? Yada yada yada. The controversy around Chinese-held companies. So I think that's creating the volatility in the market. What does it do for us? So as the volatility in the market increases and stocks fall, we start seeing 10-year bond prices rise because people jump to the cautious investment. As the 10-year bond price rises, so does the cost of money to invest in multifamily real estate at an agency level. Now, fortunately for us, we're a tier one lender and a borrower, and it affects us less than other people. It still does affect us. So as the market drops and the volatility in the market, bond prices go up, cost of money goes up, and then it affects building, the economy. It slows down the velocity of capital everywhere. So it could have a huge impact on where things going. Remember last week, highs, now we're tumbling again. So this just takes me back to the day I made the decision that multifamily real estate was going to be my primary investment vehicle. Guess what happened to the value of my properties when these stocks tumbled? Nothing. They stayed stable. Guess what happens as the cost of capital goes up? Nothing. My rents, as long as my rents keep increasing, the value of my property keeps increasing. It's not affected by the down market. So this just reiterates, and this helps me sleep at night. You know, I've got a few dollars in the stock market I play with. Don't get me wrong, but the bulk of my investments, my generational stuff, and my grandchildren is all tied up in real estate.
Chris, my financial planner 2 weeks ago said, Nate, the stock market's at an all-time high. This is the perfect time for you to go all in on the stock market. And I'm like, but it's going to crash at some point. Like I literally watched my 401k get cut in half in 2008. He's like, yeah, but that doesn't matter. It's going to crash. You're right. You're absolutely right. And I'm like, well, how doesn't that matter? He said, well, it doesn't matter because it's time in the market. If you just stay in the whole time, even if it crashes, you're gonna outbeat anything else. And I'm like, you know what? I think I'm gonna stick with at least half in real estate, and I'm gonna sleep really good at night.
Yeah, I concur 100%. That's just an insane line of thinking. And he's right, you know, over time it's going to increase, but why would I get in now? It just doesn't make sense sometimes. I'm here to tell you one thing. Whether it increases or decreases, when you buy and sell is when he makes his money. So
yeah, yep. Fees.
yeah, fees.
All right, who's this guy? If anybody knows this guy, put him in the chat. If anybody knows this guy, put him in the chat. Who is this man with his finger pointed in the air? He came out with some pretty controversial comments this week. I don't know if you guys saw the video on this or not, but he was recorded in a Zoom call between him and most of the staff members of the organization he represents. And he said some pretty vulgar things. Chris, who is this guy? What did he say? Why does it matter?
Jamie Dimon. So I'm not going to. Basically, he was speaking. Man, this guy just irks me. Okay, so the reason he irks me is because I feel that JP Morgan is one of the companies that's like a mainstay. It's prestigious. It's just supposed to be what's right. The company is doing absolutely unbelievable as a result of their stock prices and everything else as a comparison. And then we have this guy who is supposedly steering the boat, captain of the ship, talking about bringing the employees back to the office, which I don't necessarily disagree with, right? I don't necessarily disagree with bringing employees back to the office. You know, there's a lot of data going both ways. But what I do disagree with is the expletives he used to describe, what he was saying. He says, he's talking about the return to office stance and the petition going around by employees, and he's don't waste time on it. I don't care how many sign that blink, 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 blink petition. And I think that a CEO should have a little more class than that. So I take real issue with this guy who's supposed to be the public face of JP Morgan Chase. I think they should oust him. Whether the company is at an all-time profit high and all that stuff, he's got to go. This is just absolutely ridiculous. This is what we want our kids, our middle school kids looking up to. I'm going to be some great entrepreneur. I'm going to climb up through the ranks in a beautiful company like JP Morgan Chase, and then this is what they're going to look up to. This is the role model. Get this guy out of here. It's just ridiculous. You're not intelligent enough to use proper language. I'm done. I'm done with this guy. I'm sorry, but I really don't have any opinion on the matter.
No opinion whatsoever. No,
Uh,
but Chris, how do we argue with their stocks at an all-time high? Like this guy has led this company to reaches it's never touched before, and his principle, like I'm gonna go with Hassan put in the comments here. I sort of agree with his principle on it. It's a lot of people ask me like, well, how could you have ever voted for Trump? And I say, you know what? Trump has his narcissistic personality, but it's not the man, it's the principles. It's the economic policies, it's the Christian values. And so, I don't think that JP Morgan CEO Dimon said things the right way, but I think he said what he needed to say.
Okay, so listen, you're really addressing something to me that you're going to bring the Irish out of me, as they say. So I get it, right? So at what cost, at what expense, at what moral expense do we have the financial gain? At any cost? Listen, I'd rather be a few shekels light in my pocket than to represent something like this. And the idea of just the CEO addressing his employees in this manner is deplorable to me. I don't necessarily disagree with his policies. He may be right, but he's delivering the message. And you bring up the narcissistic Trump. Oh my gosh, you don't know whether I'm a Trump supporter or not. But I am going to say this: when the economy was beating the drum, it was just going gangbusters. Our president, at a photo opportunity, reached up, grabbed the French president, pulled him backwards so we can get in front of him. So while yes, we're banging economy, everything's going great. Think about what the perception is of that, right? Again, I go back to the kids of this world in middle school. These are the things that they're looking up to. Trump, I agree with you. The values, the policies, all of that. But why can't we have a complete package? Why we can't have somebody with a little humility that takes those Christian values and put them out in front of them? And by the way, Dimon's the same guy. Proclaims, he's in church every Sunday, but then he's doing this in public. As faulted as I am, the man that you see right now is the man that I am behind closed doors, and my wife can attest to that. It's absolutely 100% the way I am at all times, and I just know that if I'm seeing a glimpse of this is the true man that you see behind that's who he is at the core. You can't do these kinds of things. If that's who you are, you know what? Maybe you better spend a little bit more time in prayer and ask for a little grace and for a little help in guiding your employees. Because golly, this is just not cool.
Chris, if you run for president, I'll back you. So unfortunately, the candidates that we have, even the CEOs, sometimes we don't always get to pick. But on other terms, inside of their own company, they are setting records. They're doing well financially.
Yes.
There is a shining star inside of JP Morgan right now.
Yes.
And he is head of their real estate in all of the Americas, so North America included, their biggest market. And he's come out, this is Chad Treadway, and he's come out and he's saying that values for commercial real estate, multifamily, our asset class, they have not seen them this depressed in 50 years. What does that mean when he makes a bold claim like that and he says that they're going to allocate a ton of assets towards commercial real estate, multifamily, and it's this depressed? They haven't seen it in 50 years. What does that actually mean?
Well, let's go back to the basic premise of anything: buy low, sell high, right? So if these properties are in fact depressed right now, and we know there are, you got a chart, right? Yeah,
I do.
All right, so the cycle of multifamily real estate over the course of the past 50 years, let's say, or even the past 25 years, look at this. We had a bounce in 08, 09, right? We're at the bottom and it bounced up and look what it did. It recovered quickly. Well, the same thing is happening now. Well, and we predicted this, and this is when we started going in hard on multifamily. We hit that bounce and it's coming up. Yeah, everything's depressed. So that means it's the opportunity to buy low, sell high. Not only that, there's a lot of other driving factors that comes with multifamily real estate. There's the cost, again, back to the whole volatility of the stock market, forcing rates or interest rates up and making the availability of capital scarce. It's affecting building and starts and all of this stuff, so that there's not a lot of inventory, therefore driving the demand for multifamily. Prices are going down. The demand for multifamily continues to increase. It's going to drive rents up. And since multifamily values are based primarily on the NOI or the net operating income, not an abstract that some appraiser gives you, actual facts and numbers, as the rents go up, the value of the property increases, and therefore I'm buying low, values are increasing, and then I can either sell high or refinance and take my cash out and stay in an asset long term. And I'm here to tell you, if I buy low enough, I'll hold that asset forever because I'll just refinance it and get my investors' money out, keep them in the deal, keep paying them dividends forever and ever. Amen.
We're doing that on 2 specific assets right now. Bought
Correct.
them at a substantial discount. We're refinancing capital back, so investors get their money back, and then they get to have dividends forever. Hey, so Chris, I'm going to change gears in you because I need to talk a little bit about what this means. There's REITs right now that are saying, hey, we're about to have some really good quarters in front of us because rents are going to go up. New construction is slowing down. These deliveries of these new units, they're way slowing down. What does all of this stuff mean?
Well, again, because the lack of starts. So multifamilies last month is down by 13.5%. The starts are down by 13.5%. So what does that mean? Well, population is continuing to age, right? And they're continuing to need housing, but we have less housing available. So again, back to what I was saying just a minute ago, supply and demand. There's no increase in starts. Therefore, there's a higher demand and no supply to support it. So as we continue to see this, rates go up, and that's where the REITs make their money. Because now their value, again, based on NOI or the rate, how much you can rent these properties for and keep your expenses down. And so an NOI is, in quick 8-year-old terms, the amount of rent you can collect minus your expenses, you end up with your net operating income, just for simplicity's sake. So the higher you can make the rents, your expenses shouldn't go up that much, right? Because they're fixed. And therefore your NOI goes up. And then there's a formula you use to determine your value based on the NOI. That's what these guys are talking about. That's why they think they're going to have a great couple of quarters, because there's no starts, there's no inventory.
So what I just want to explain a little bit, Chris, in more 10-year-old terms. This graph right here, this is the last 5 years or so. Blue line, the light blue line is permits. That's when someone goes and applies for permission to build. That trend started going up when interest rates were low. Back in early January 2020, interest rates were low. A lot of builders were applying to build, and you can see that's where that line took off. Starts, that's the dark blue line. It should follow a similar line to permits. If someone spends the money to go apply for permission to build, they're usually going to follow through and go build. So you can see that those 2 lines, they kind of correspond with one another. The green line is completions. This is builders who have built the final product. They're delivering it to the market right now. You can see that completions have been going up, 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 all the way until right now. Literally, this is dated February 19th, 2025. So this is literally a report that just came out a week ago. You can see the tail end of this is starting to drop. That's this far right-hand side of the graph. And so as the reason for that is because interest rates are up, costs are up, insurance is up, just like Chris said. So all of these things have kind of compounded upon builders. So builders are building less right now. It's too expensive for them to build. Therefore, completions of new units goes down. And then there's only one way that rents can go. If there's not new product coming out and there's no new competition, it's all basic economics, supply and demand. Our renter population is going to have to start paying more for existing rentals because there's no new product coming out. Chris, did we 10-year-old that enough now?
You did. And I just want to point out one more fact about that chart. You'll notice that the permit curve and or even the start curve is 18 months trailing the completions. So if you look at it, you see how the spike in the completions is about 18 months past the spike in the January, yeah, right there. So and now that curve is falling off. There's no new, right, exactly. Now there's no new starts. And so you're not gonna have any new completions, and no new completions means less inventory on the market.
Precisely. Chris, I'm going to go to the next article on this. How do interest rates, how do they actually affect rental prices too? You got a big columnist that just came out multifamilies from Peachtree Creek Investments. He says that higher rents are coming if interest rates don't budge.
Well, if what the direct correlation between rents and interest rates is this. People can't buy the houses that they need to live in, right? So it's cheaper to rent. And if it's cheaper to rent or even more affordable, some people have been priced out of the houses that the homes that they need or want as a result of the increasing rates, interest rates. So now they have to go rent. So these people that historically would be buying a house if their interest rates were lower aren't able to. So now again, we're increasing the demand with no increase in supply. So once again, raising the rent rates. The higher the demand, and less inventory, the higher the rents are going to be. There's more competition for the same product, but it's still cheaper to rent than it is to buy new. It's crazy. It's just crazy.
Cool. Chris, I'm going to move us into this next segment, and this is one that's sparked controversy for years. We've got some holy sites in the Middle East, Saudi Arabia specifically, that have never allowed someone that is not a Muslim to invest, to own properties specifically, or to invest in that area. And for the first time, at least to my knowledge, Saudi Arabia just opened up foreign property investments in holy cities. Now, you can't own it directly unless you're Muslim, but even as a non-Muslim, you can invest into a publicly traded company that owns in their holy cities. So we've got Makkah as one of the holy cities that these investments are going to be allowed to. And then we've got Madana, and I want to make sure that I say it right, Madana. And now you can invest into them. Your thoughts, Chris? Well,
the cool thing about this is going to be the novelty of it, right? So a lot of people will jump on board, but you gotta understand something. The prices and the costs over there are significantly higher. And the dollar value, our dollar value there is significantly stronger. So if you're looking for foreign investments in these places, again, foreigners were not allowed for the longest time. You're now going to see an influx in investment into these areas. So therefore, I believe the returns are going to be significant. And the volatility of Saudi Arabia outside of the war with Iraq back in the day has been pretty stable. I think that it's a safe place to invest. Again, it's not my thing, but I think that it could be an interesting investment for a lot of people.
So you're not going to go all in, Chris?
No, I'm definitely not going all in. Because listen, I have one policy, and that's this. I believe in America first. I'm sorry, but I believe charity begins at home. I believe investment in home has a ripple effect outward. So that's where I focus my activities. And I know that the things that we do here in the United States have a positive effect on our community. So while there's so many opportunities in the United States, I'm not looking externally. I have owned real estate in other countries, significant real estate holdings in other countries, but that was a result of business ventures that I was involved in Costa Rica and in Mexico. But I built industry there. I had software internationalization companies where we needed to be native language speakers, and so I bought properties. There was a thing I did in Mexico where we couldn't remove. We restored a bunch of old films in Mexico. I couldn't remove those films from the state of Mexico, so I had to have property there to do it. But outside of that, I tend to invest here in the United States. Oh, and I do have, through one of my companies, significant holdings in Cuba. But other than that, United States.
Well, speaking of the United States, and then Chris, I'm going to flip this over to talk about how people can bring $40 million worth of opportunity to us. United States, this is our investment opportunity right now. There's only 3 spots left on this. And if this is something that you're thinking about, like the big T word, tariffs, manufacturing inside the United States right now, we feel strongly it's going to do well for the next few years and during this administration. So we've invested pretty substantially in this. I have my personal money in this, and we're paying dividends or returns up front between 8 and 12%. And then there's backside profits as well that can lead up to 20%. If you're interested in exploring this, then book a call with us. We're down to just a few spots left for it. And then once this one's closed out, we're going to close it out. We're not going to reopen another industrial fund. So this is literally the last little window that you can get in on the industrial side. If you're looking for multifamily, then just wait a little bit longer, join our wait list. The wait list is already, we've got a good healthy amount of investors on it right now.
We do.
We fully expect when we launch our next multifamily, it will fill up really fast. Most of the time it's 50 to 60% repeat investors with us. People know what we stand for in the multifamily arena. So if you're looking for a killer home run multifamily property, join our wait list. And then as soon as we launch, you'll be the first to know. You can do either of our investments, the wait list, or learn about this one that I just put on the screen by clicking the link to book a call with our team. 15, 20-minute call. We get to know one another and we'll get you any information that you want. Or if you're following us online somewhere, put the word call in the comments, CALL, and our team will private message you a link that you can jump on with us for. Chris, we have this email address, deals@homeinvest.com, set up right now. We're ready to field people who are bringing multifamily opportunities. You already said somewhat of the parameters. You said basically $40 million deals, $25 million worth of loans or debt on the property. Would you give any more guidance to someone that's out there hunting down deals on what you might want to see?
100%. So those aren't the only deals that we'll get involved in that we're interested in. So one of the things that we look for are red states, right? Because we want landlord friendly states. The other thing that we look for is population growth and job growth in those areas. So keep that in mind. So before you send us a deal, do your due diligence or we'll reject the deal immediately. And anything that's cash flowing from the very beginning, we'll take a look at. We don't like to get into deals under like 7 million. We prefer for the larger deals. That's our next big hunt. But I want to also make sure that you understand, there's our areas, Iowa, Florida, Oklahoma. These are all great areas, Kentucky, Tennessee, Texas, Wisconsin. And just so you know, special favor for Florida at this point. We're really looking for anything south of Orlando. We're going pretty hard in the Florida market right now because we know that everybody wants to live in Florida. It's a beautiful state with no taxes. So there's always going to be a continuing demand with that. So keep those things in mind as you move forward. And one other thing that I wanted to touch on is this. So right now, the Jobs and Tax Act is back up for consideration. So if that passes very quickly, multifamily real estate is going to become scarce. It's going to become scarce.
Let me explain what that is. So
sure.
The Tax Cuts and Jobs Act was passed in 2017. This was the first Trump administration. They basically made it really, really beneficial for you to own real estate and invest in businesses. Like I'm talking to the point where Chris and I both got massive IRS refund checks every year for multiple years because of what passed. Well, that wasn't a permanent tax cut. What that was is a temporary. You invest in real estate, you can get massive tax. I don't want to say the word tax credits. It's not the right word, but you can decrease your tax basis substantially to the point where you can get refunds if you do it the right way. That is going away this year, unless what Chris just described, unless this administration passes an extension of it. And right now they have green light everywhere because they control the presidency, the House, and the Senate to pass this. And what Chris is just telling you right now, this is not some like push to jump. This is reality.
No.
When they pass this, what's going to happen, Chris?
Real estate's going to become scarce, right? Because anybody that's got a few dollars in the bank or has passive income or big income, they don't want to pay taxes on it. The number one benefit. Remember several years ago when there was the conversation between the Democrats and Trump, where he made $1 billion and didn't, and I'm exaggerating, he made $1 billion and didn't pay a penny in taxes because of the tax laws. This is what he was doing. He was using the tax code to his benefit. So let's remember, Trump is real estate, right? We all know Trump for real estate. So this is going to benefit him and it's going to benefit the rest of us. So people are going to be buying multifamily real estate for these tax incentives because not only do you have an asset, you have a cash flowing asset, and you have the tax benefits. Literally, I paid next to nothing in taxes last year as a result, and I had one of the best years financially I had in the past 20. Utilizing the Tax Cuts and Job Act, accelerated and bonus depreciation. So I'm here to tell you, get on the wait list, be one of the first people on the wait list because the deals are going to be hard to come by and they're going to fill fast because people are going to not want to pay taxes on their income next year for this year's income.
Cool. So with that said, Chris, we'll wrap this thing up. If you guys are looking to get on our wait list, then use the link that's in the chat or type the word call in the comment section. If you're following us online, just type the word call and we'll reach out to you through a private message. And then we can get you in queue for the wait list. And as soon as we've got one, we'll launch it over. We'll get it over to you first. Chris, thank you so much for sharing today. And thank you guys for coming. Thank you for supporting. We will be live together in studio. If you guys didn't see it, see the news, Chris and I cut the ribbon officially on our Palm Beach Gardens office. We have a live studio over there. So Chris and I will be live together, rocking it out on next week's Opportunity Zone show. Chris, thanks, sir. Everybody have a good week.
God bless everyone.